1987, my father started what was then called Sona Steering. Started our joint venture journey with the Japanese collaboration. It's great to have joint ventures, but very often joint ventures restrict you geographically. When he died suddenly, and we had all the challenges in the world, but we said, you know what, we can do this because we own a technology that is so unique.
But if you had to break it down from a sense of how that market has evolved,
the auto component industry is grateful to the fact that Maruti Suzuki came to India.
you have such great access in the country that you must be doing a lot.
For me, trust and respect is extremely important.
In terms of exports, what growth has looked like for you, how has that part of the business evolved?
Hello. Before we get started with this episode, I quickly wanted to share that we're now a part of the Zerodha Media Network. Thank you so much for watching.
Welcome to the Indian Silicon Valley podcast. I'm your host, Jivraj. And today I have in me a very special gentleman who's built a company that we're not usually talking to, but is very, very large in B2B, in manufacturing, and one that I'm sure if you've ever been in the public markets, you've heard of. Join me in welcoming Mr. Sunjay Kapur, who is the chairman of Sona Comstar. Thank you so much, Sanjay, for joining me today.
Thanks. Thank you for having me.
I'm super excited to be doing this because the kind of scale you've seen, the kind of businesses you run is absolutely massive. And all of the founders that I've hosted otherwise and the ones watching want to learn from you, aspire to get to that scale. So it'll be lovely to dive deeper into all that you have done across the last couple of years. Where I want to start is maybe with more context, right? So if you can help us understand the different journeys, different inflection points in the Sona journey. It was started back in the day in the 1990s, if I'm not wrong, by your father.
Right.
If you can walk us through that, it'll be a great starting point.
Yeah. So, in 1987, my father started what was then called Sona Steering, which then went on to be called Sona Steering Systems Limited. And it was pretty well recognized as a business because, we started our joint venture journey with the Japanese collaboration with a company called Koyo at that time. Today it's called JTEC. And it was really for Maruti Suzuki. When Maruti came into India, they were looking for companies that would support their journey. And several auto component companies had the opportunity to, bring joint ventures into India. And the natural fit were Japanese suppliers that were supplying to Suzuki in Japan. It was definitely, it's been a great journey, an interesting journey for us because, we've gone from being joint venture partners to owning technology on our own. And, of course, that's a much longer sort of journey and a conversation. But I'll begin with, back in 87 when we formed the joint venture, 89 we started commercial production. And then in 95, we sort of started a string of different companies, again, automotive related. The steering system business was our flagship business. We backward integrated to some extent, where we started making parts that went into the steering system. And without getting too technical, ball joints, tie rod ends, etc., which really formed the entire steering system. And we did that because we didn't believe the right technology and quality existed in India. Our business was really built on the foundation of building a quality company. That was something that was very important to my father, building a business that was high in quality. And what he wanted to build was a company that India could be proud of. And that's really been the foundation. In 1995, we started different joint ventures, as I said, and one of them was a joint venture with Mitsubishi Materials. Sona Okegawa Precision Forgings Limited was what the company was called at that time, and the company we're referring to now, which is today called Sona Comstar. And Sona Okegawa Precision Forgings Limited, developed technology for warm forged bevel gears. And bevel gears go into differentials. Again, different components. Fortunately, a differential is something that every vehicle uses in the passenger car space, in commercial vehicles, in off-highway, in farm equipment, whether it's combustion engine or an EV, they all use differentials. So it's been a great sort of product that we began to build, and we of course were focused on the bevel gear that went into the differential. over a period of time, we saw lots of different opportunities in the gear space. In 2008, we acquired ThyssenKrupp's forging division, which came with 3 factories in Germany and 1 in the US. And we, sort of grew that business more from a technology perspective. For us, what became important after quality was how do we own the technology that we operate in. It's great to have joint ventures, but very often joint ventures restrict you geographically because, these joint venture partnerships are with larger companies, and larger companies have larger markets across the world. And India at that point when we started was a much smaller market, and it had a long way to go to where it is today.
Sure.
So, we began our journey with Mitsubishi Materials. In 2008, we approached ThyssenKrupp. It came up for sale. We bought that business, and we started growing the gear business. And then I'm going to cut straight to 2015 because that was really a critical part of our journey, where the founder, my father, passed away very suddenly, and he was at that time running the forging business. I was managing the steering system business based out of India, which was predominantly India-based, and the forging business was pretty global in that we had plants in Germany, in the US. We were in a small plant in India, which today is obviously, of a significant size. And when he passed away, we had an Indian private equity investor called JM Finance. And JM Finance has been, a great support to us because they've been in our journey or with us through our journey, right from the beginning of time, and continue to be good partners that we have. And I have a great relationship with Vishal, who today runs JM Finance. My father had a great relationship with his father. And, they were good partners, and they wanted to exit the Sona group. They'd been invested with us for over 10 or 12 years, and we started talking to other private equity players. And that's really when our journey began with Blackstone. So again, we came from a one-product company, which is a component, which was differential gears, to making differentials. And we saw the opportunity to make differentials because we started our life making differentials with an off-highway vehicle manufacturer. And then we said, you know what? We know how to make this. We understand the technology. It's a casting that you buy. We machine the casting. We put the forgings in there and make a differential. What a differential really does is it allows the wheels to move at different speeds when you're turning, from a turning radius perspective, just so that, you understand what a differential is, to give it context. And when Blackstone sort of approached us, when we did the rounds and we were looking for private equity players, I was very attracted to Blackstone because the kind of private equity shop that they've built, best in the world, largest in the world, and it was something that we looked at and considered to be what could be a very strong partnership if we wanted to go down the road of building a business which was
IPO.
robust, big, and we wanted to list the business. So that's really, from 2015, that journey began. In 2019, we brought Blackstone into the company. Blackstone had acquired a company called Comstar, which is in the starter motor business. And again, something that typically we may not have done, because of the fact that it was so related or dependent on the combustion engine. And we saw in 2016 a trend that was going towards electrification. A lot of people may have opposed it, but I think we took some early bets to say that things will go electric. And we still went ahead and bought Comstar because Comstar had a very similar profitability, the fact to Sona BLW, which was then called Sona BLW.
Yeah.
And it had zero debt. It had 40% capacity utilization, which meant that it would throw up enough cash for us to invest in growing our forging business. And that's really when the journey began. And Blackstone came in 2019. We bought Comstar from Blackstone and then merged the two to become Sona Comstar.
Lovely. No, it's been quite the ride since 1987 to now. And I'd love to also know maybe what your influence of business was growing up. And then, when 2015 happened, what was your role in,
Yeah.
turning the business around, growing it till 2019, and since then also you serve as the chairman of the board. You have a professional CEO, but you mentioned in one of the previous conversations that there's a strong sense of alignment. There's a lot happening. So if you can walk us through maybe early influence and what's happened
Yeah.
after
So
2015.
my father started his life making gears in the 70s. His father-in-law sort of had an opportunity to set up a business, and he set up this business called Bharat Gears in Mumbai. So we've always been a family. Though my father came from the jewelry business, his family came from the jewelry business. That's where the name Sona comes from. Sona really is related to jewelry because Sona meaning gold. When my father's family sold jewelry, it was all based on trust because there wasn't any sort of certification easily available. And therefore, for him, Sona meant trust. That's really where the name comes from. And we always had a very sort of active engagement within the family. We had a lot of conversations. We would spend a lot of time going to the factory when we were kids. I remember my father had a factory in Thane, and it was really an entrepreneurial venture for him. And he was sort of setting that factory up. And we lived in Mumbai, and every weekend we'd sort of all jump into the car and we'd drive to the factory. In those days, factories were very different in nature. There was a lot of land, guest houses, sort of a lot of interesting things for kids to sort of do because of, parents spent that much time in the business. So we spent a lot of time, going back and forth. I remember the factory. I remember sort of, walking around the factory, even being excited by sitting on forklift trucks because they were so new. So, so business was always sort of something that we were familiar with. In 2015, when my father died, I was, of course, people teach you about succession, but nobody teaches you what happens when the founder dies. We were faced with a lot of challenges. Challenges that we've been able to overcome because of pure belief, grit, determination, to succeed. And that's also something I think I learned or picked up from my father, because whenever I asked him why he did his PhD, he always said, because I wanted to see if I could succeed. He went into Michigan, did his bachelor's, then followed it up by a master's and then a PhD, and purely because he wanted to see if he could succeed. So I think, it's something that that's been inbuilt or ingrained, in us, as a family. And so I think it served us well, or served me well in 2015 when he died suddenly, and we had all the challenges in the world with a failing operation in the US, with a very difficult operation in Germany. But we said, you know what, we can do this because we own a technology that is so unique. And really, to that point, I talked about Comstar earlier. We've been able to transition Comstar also from a starter motor business to a traction motor business. And that again came from a lot of investment in R&D and a lot of belief that we could do it. A lot of companies would, often sort of, give up because they may not believe that it's a technology that they know, it's a technology that would require a lot of investment. And there were several failures along the way. And I think that's really something that distinguishes us from others, is because we are okay to fail. We're okay to say, it's fine, we failed, but we learned something. And that's exactly what's happened, in our journey.
I love that. That's super helpful to know. Sanjay, I'd also love to understand maybe from your viewpoint as to how the India automotive industry has evolved, right? How have you seen it over the last 2-3 decades? Because in terms of startups, you've seen a lot of activity in the first car buying market, second-hand car buying market. There's been EV companies which have come up as well. They're very different, of course, in nature. But if you had to break it down from a lens of how that market has evolved, I'd love to hear your thoughts.
Yeah, so, I'll go back again to the 80s and say that the auto component industry is grateful to the fact that Maruti Suzuki came to India. Maruti Suzuki really gave birth to the auto component industry by giving us opportunities to create these joint ventures. And then we had, great support from the Mahindras, from the Tatas, where they gave us opportunities to design, from scratch and really get involved in black box design, get involved in investing in R&D and creating design. And I always say this in every conversation I have with everybody, that the real key driver for us to succeed is investment in R&D. And we really need to focus on technology. So when you talk about the evolution of the auto component industry, I'd say going from joint ventures to investment in technology, today to EVs, and also if you look at the startup ecosystem, it's pretty phenomenal in terms of technologies for manufacturing. What's been easy to, I don't want to say easy, but what's been sort of, more popular has been services businesses.
Yeah.
But today, we're seeing opportunities in technology, in product, in manufacturing, and that's really where, we need to focus as an industry.
Absolutely.
You talked about electric vehicles. Several people want to build electric vehicles. I don't think it's an easy task. I think it's a very difficult business to build a vehicle. I don't see us doing it ever in the near future, at least as far as I can see. I think, we're really good at building components, and we'll continue to be in manufacturing. Yes, technology has evolved. Technology will continue to evolve. So if you look at our own business today, we have a sensor business that's based out of Serbia that actually detects a baby's heart rate and breathing rate. Now, that's done for a safety standard in a vehicle. So if you want a level 5 safety standard in Europe, you should be able to determine whether there's a baby locked in a vehicle with all the windows up for more than 10 seconds and alert the driver. So that's a company that we bought in Serbia. There's a lot of different use cases for it, industrial, as well as sort of automotive, as well as, and I really want to now shift tracks to say automotive to mobility. We're not any longer an automotive industry. We're a mobility industry because, we can supply into any kind of vehicle, anything that moves. And when I talk about any kind of vehicle, I'm talking about even drones, bots. These are all vehicles that are gaining more sort of momentum.
Sure.
Even from a supply chain, from a people carrier perspective, etc. So I think the industry has evolved. Startups will play a very big role, and the ecosystem needs to sort of become more robust. And I'm reminded of a conversation that I continuously have with policymakers to say we need more emphasis on R&D and testing for the startup ecosystem. Someone needs to build out more than just incubation centers, a center where startups can come and test their technology. And that's really what is going to help the ecosystem, the startup ecosystem, going forward.
No, that's super interesting. I think the point around mobility, the point around electrification. Do you have thoughts on how deep we will become as an EV ecosystem as well? Because it feels like we're just getting started and we're behind, let's say, other geographies. Where do you see this going in terms of penetration? Where do you see this evolving? We're primarily also a two-wheeler, three-wheeler market. Do you see that changing? What are your thoughts there?
So I think, two-wheelers and three-wheelers will definitely become electric much sooner than passenger cars. Electrification is inevitable. We may examine alternate fuels. However, I think for electrification, the biggest challenge is range anxiety. And the minute we resolve that or solve that problem, through charging infrastructure, through better batteries, etc., and maybe more cost-effective batteries, electrification will just sort of grow. You'll see an exponential growth in electrification, in my opinion. I don't see why it won't. I don't see how we will be left behind in the medium term. I think we will adopt technologies which are very similar, and you can see that today. So with electrification and all that's happening with the disruption in our industry, the opportunities are immense in terms of connectivity, in terms of telematics, in terms of infrastructure building, in terms of sensors that I talked about. We've also, by the way, built a product called an active suspension motor. So what that does is it changes the ride handling depending on the curvature of the road. We're supplying that to a company in China, for example. So again, all these technologies will get adopted in India. And you're seeing cars today that you can talk to, cars that are connected. I think what's also going to happen is smart cities are going to play a big role in terms of how, the mobility landscape integrates with smart mobility.
Absolutely.
With smart cities. So smart mobility, smart cities.
The entire ecosystem will get built out.
The entire ecosystem. And therefore, there's a lot of opportunities in the mobility space. So again, let's move tracks and say, not the auto component, but the mobility space. And that's really where companies are going to have to invest more in R&D, in testing, and continue to innovate. And I think we need to create that innovation culture, innovation-driven culture in companies across the board.
No, absolutely. I think that's very, very helpful, especially for startup founders watching. I think, around charging infrastructure, interoperability, how to grow a battery life, battery recycling, all of these are interesting spaces.
Circular economy is going to be huge.
Yeah, a lot of these very interesting spaces. Thanks so much for sharing, Sanjay. We started on a very macro note. Let's maybe go a bit specific on some of the things that I think will benefit the audience. One of those are in the Sona journey. There's been a lot of strong M&A opportunities, right? You've bought out companies, you've acquired companies, you've had JVs. Do you have a mental framework on when do you choose to partner with somebody? Which are spaces that you look at in terms of inorganic growth? How have you seen it as a business leader when you have, captured some of these opportunities?
Yeah, so for me, Sona is a 50 to 100 year play. So I like to look at it from a long-term perspective in terms of, where we are today and where we will be in the future. Yes, I cannot for certain predict, anything, as nobody can. However, when we look at businesses that we want to acquire, or technologies or joint venture opportunities or technology transfers, again, the key word is technology. We'd like to look at opportunities which are going to bring us technology. As a company, we're very focused on profitability. We're very focused on growth. So we'd like to look at companies that are high growth, high profits, and high in technology. And very often you can't find all three in a company. However, we'd like to stick to the core as much as we can. And technology to us is very important. And when you look at acquisition opportunities, management also plays a very big role. Because for us, we've had management in place for years and years. We pride ourselves on the fact that we've had management work with us over decades. And it's a two-way street. Loyalty is a two-way street. It's not sort of a one-way street. We respect the employees or the team that sort of works with us. We will spend a lot of time, even when we're looking at acquisition opportunities, in terms of understanding the team. We do not, aim to change the team if we were to acquire a business. And case in point, we've just acquired the railway equipment division from Escorts Kubota. You're in the process of acquiring that. And it's got a great team, and we'll continue to work with that team because they know how to run the business.
Sure.
When we looked at the Serbian operation, the founders still own part of the business. Of course, we bought majority of the business, but the founders are still owners of the business. They're involved in the business because they know how to run the business best. We're not trying to profess that we come in and we know how to run a business better than anybody else does. We look at opportunities because we believe that they have a technology that we can bring value to, whether it be from a market space or it be from customer base, or the fact that we may want to branch out into that area of mobility. So, for example, the railway equipment division is a great example of the fact that is clean mobility. After walking and taking a bicycle, railway is the cleanest form of mobility. We like clean mobility. We like the fact that we're driven by sustainability. And the railway business is something that for us is phenomenal because the opportunities are immense here, because the government is investing in railway infrastructure. We will have better technology as we evolve. We will have bullet trains. We will have forms of mobility in terms of railway that will be growth oriented. And again, the railway business has a lot of technology.
Absolutely.
It's not easy when you hit a brake and you need 10 coaches behind to brake as well. So there is a technology involved in that, and therefore we will continue to look at businesses that are technology oriented. In the mobility space, you'll also see a lot of software. There's a whole area of sensors, radars, software that we're seeing emerging. And
Absolutely.
it's something that, and to your point, you talked about circular economy, but the other big business is data.
Yeah.
Data analytics. There's so much data being thrown out in the mobility space. How do you use that data?
Yeah.
To better AI.
Yeah.
We're using AI today in our manufacturing processes.
Yeah.
How is that going to evolve in manufacturing as a whole? Is something that's going to really be a driving force in the future.
Absolutely. Battery management systems, etc. How do we better underwrite EV financing through data, etc. I think all great opportunities, but thanks for that framework. I think that really helps. I'd love to also understand that in some of these partnerships with, let's say, geographies which are non-Indian, right? Are there significant learnings more than technology that we can adapt from, let's say, manufacturing processes outside, labor practices outside? How have you looked at the entire, what can India learn in terms of manufacturing? And especially you've seen the wave now. I think every venture investor talks about the China+1 thesis. Do you have a sense around manufacturing India and what can we learn from other geographies?
So, a great question. I think it's the China or the India +1.
Yeah.
And I feel that we can leverage that if we invest in technology. If we don't invest in technology, it'll be very difficult for us to leverage that opportunity. I'm a strong believer that manufacturing in India is excellent. It's something that we will continue to do. If I were given the opportunity, I would continue to expand only in India. We have the nature of our business is such that it's global, and therefore we do require operations outside of India as well. However, manufacturing in India is really, I would say, if you get it right, it can be done exceedingly well. I feel ease of doing business in India can be improved. Definitely, you want an environment where it's easy to do business, where it's predictable more than anything else. And I think that's something that we need to, as a nation, work towards. However, I think we need to build out manufacturing, because if we want to go from 15% GDP to 25% GDP to really leverage our demographic dividend, we need more manufacturing jobs.
Absolutely.
And therefore, we should adopt the principles of manufacturing in terms of technology, in terms of, building more robust and efficient manufacturing practices. From the West, from the East, we've had a great alignment with Japan. We should look at Korea, we should look at Taiwan, we should look at Philippines, we should look at, Vietnam in terms of policies. We need a deeper engagement with Asia when it comes to policy. I think the right policies will create the right environment for manufacturing, and we're sitting on a great opportunity today. It's really for us to take. It's ours for the taking. It's for us to leverage this opportunity of manufacturing in India, and I feel that we're in the right place at the right time. Companies like ours are really going to define the mobility space of the future. And I think this generation is going to define what happens in mobility in the future. And therefore, we must leverage this opportunity for the next 10 to 15 to 20 years. India is the place to be, from every aspect, from services, from manufacturing, from talent acquisition. I feel that we've got great talent in India. And we need to leverage that talent. Yes, we need to do certain things when it comes to skilling and reskilling and building maybe a better academia industry connect. And these things will happen. However, I think we're sitting on a great opportunity.
Absolutely. No, I love that. I think it reinforces the belief in the new age India. I think constantly I hear from folks on that side of the table that India is the place to be. Here's the business opportunity. So it's lovely to hear from you as well on the same. You also have a large part of the business in terms of exports, if I'm not wrong. Can you share learnings in terms of, how some of these larger clients look at India manufacturing? What is the outlook from that lens? And maybe just in terms of exports, what growth has looked like for you? How has that part of the business evolved?
So, in the automotive space, and I go back to automotive, not just mobility, but in the automotive space, there are three drivers for growth. One is domestic, the second is export, and the third is aftermarket.
Okay.
Right? And the export opportunity is huge. Today, as a component industry, we're sitting about $21, $22 billion worth of exports. in an industry of about $70 billion in revenue, and that export is about 30% of our revenue, and that will continue to grow because I feel that companies, are more confident of the kind of companies that we're building in India and the kind of technology we're investing in India. For us, exports is a key market because of the size of the market. And if you look at the North American market, you look at the European market, they're large markets in terms of volume and value. And again, then you can't ignore China. China is a very large market, and I don't think people should ignore China. There's got to be a way in which we can work with China, so that we can supply into China, because again, that's a big market opportunity. Companies that are investing in technology, companies that are investing in good manufacturing practices, good governance, etc., will continue to have the opportunity to grow in the export market. So the domestic market, whilst it will grow, I feel the real opportunity when you look at electrification, when you look at mobility as a whole, is in the export market, and companies must pursue that. And they must sort of build businesses so that you can create almost a manufacturing hub for the world.
Yeah.
And that's really what we have the opportunity to do. China's been doing that. I think it's our turn now. We must look at how we can build a global manufacturing hub for the world.
Absolutely. I think that's super empowering and lovely to hear. I think we've covered multiple points there. And I want to go back to one of the things that you mentioned in terms of just management teams, right? If you can maybe weigh in on what your experience with people have been, in the sense that you've hired senior leaders, you've partnered with global teams, you've seen a lot of people do well in your space. What do you think the common denominators are? What do you look for in hiring? That I would love to understand, Sanjay.
So I think, it's a lot of trust and a great relationship. I mean, we have a very professional team. As you mentioned, I'm a non-executive. I'm not accountable for profits, and therefore I don't take operational decisions in the business. I leave that to the management to do. Vivek is our CEO. He's been with us since 2015, and he does a great job at what he does. He does a better job. He's a better CEO than I would be. There's a lot of trust and respect between us, between Vivek and I, and that follows through across the organization. I think it's very important to have certain value systems. And my father always said, if you make your decisions based on your values, you can't go wrong. And so we always look at it from that perspective. I think it's important to have a strong team and give them the autonomy to do what they need to do, to have trust and faith in the fact that they're engaged with the business, and they're also as part of the outcome. So in our business, we have an ESOP program, which has worked really well, and I'm grateful to Blackstone to introduce that ESOP program to us, which gives us great alignment between the shareholder as well as the management, because the management are aligned with the shareholder when it comes to the ESOP program, and therefore everyone's on the same page. And I think it's very important for companies in the manufacturing space, to share all the good that comes out of a business, because it's only natural to do that. A lot of companies do that in startups. A lot of companies do that in the software space, and I think that's something that we've learned from companies, from global companies, to see how, especially in the West, to see how management can be a part of the outcome. So having a stake in the outcome, if you want to call it that.
Sure. No, so what I'm hearing is align incentives, get high-level trust folks, give them autonomy, and the magic will happen. And I love that. I think
and a lot of luck.
And a lot
of luck. Luck plays a big role. And I always say this. I said, we've had a great journey. We've also been very lucky. We've been at the right place at the right time. Made the right sort of decisions in business, as in life. There are 4 or 5 big decisions you make throughout your life and your business life as well. And all you can do is hope that those decisions work out. So we've had good luck.
That's amazing. I think one of the quotes I keep going back to on the show is the fact that all the successful people, one of the common things across them is they attribute most of their success to luck. And that's so true in this case as well. But thanks for mentioning, Sanjay. What I want to also focus on is it feels like there are multiple stakeholders in your business, right? So there are investors, there's your customer, there are also, folks on the factory floor, and a bunch of people. Do you have a mental model to say that, okay, this is how I can prioritize stakeholders? Or is there a framework to say that, okay, there are many folks, I will place weightage to each in a certain manner?
So, our customers are extremely important to us and our employees are extremely important. And third, we look at the shareholders,
Okay.
quite frankly. I mean, because if the customers are happy, they're coming back, we're doing more business with them, automatically the business will do well, employees will benefit, and shareholders will benefit.
Okay.
So I think it's an ecosystem that's very well sort of defined from that perspective. And then you've got to look at the backbone of our business is really our supply chain. Our supply chain is very complex. In the auto component industry, in the mobility industry, supply chain extremely complex, extremely dependent on each other. And therefore, we need to work very closely with our suppliers as well.
Yeah.
So, it's important for us to continue to work closely with our customers, to give them the kind of technology and the kind of solutions that they're looking for, and the kind of solutions that will benefit the end customer. Our employees are extremely, extremely important. Our supply chain extremely important, and then of course shareholders are sort of have that faith in us or have faith in management. So I'm the largest shareholder of Sona Comstar, and then we've got a lot of different institutional investors. So my role really is also to spend time with our investor community, to talk to them about what their expectations are from the board.
Sure.
Not just for the management, but from the board as well, because the management does spend time with them and knows them well, and rightly so. I think it's a
Very
great
holistic.
sort of
Yeah, it's a complete cycle, and you're in the center of it. That's why I was curious to understand. On the investor piece itself, right? If you had to give us a very layman's explanation of when did you decide to maybe get like an investor like Blackstone? What do some of those discussions look like to the extent that you can share? And what goes into your framework of deciding a partner as well, right? And then maybe when the deal happened, I think they own now more than majority, right? If I'm not wrong.
they were majority owners.
They are majority holders. So how did you maybe structure it, etc.? Because a bunch of people, like very few people, have the insight that you have or the nature of the transaction. So would love to understand from your
Yeah, so
insights.
it was a unique transaction in that I gave away majority to Blackstone,
Yeah.
and I stepped away from manager to owner. And these are two things that I often talk about and encourage business families in India, because I'm not trying to profess or say that owners are not good managers. Definitely, owners are good managers. However, sometimes if you look at a management team that can deliver great results, you do have the option to step back. For me, it was very important to build a business over the next 50 to 100 years, to build the Bosch kind of business, a ZF kind of business, which was, large enough in the mobility space, that would live way beyond our time. And therefore, I felt it's best to professionalize the business. Blackstone, again, I touched upon this, for me was or is one of the best private equity shops in the world. And I said, if we're going to go out and attract private equity, why not attract the best? So they were great in terms of bringing us to public markets, in terms of us understanding financial metrics and monitoring of businesses better. And of course, I talked about the ESOP program, which was a great benefit to us as a business, to the employees, and to the overall benefit. So when I took that decision, it took me about a year to close on that decision, to say to myself that I'm moving now from manager to owner. I'm about to give up a majority control. Today, I am the largest shareholder, so things have come back to where I'm the largest. But when I looked at it, from a lens of, do I really want to hold on to control or build a valuable business? And for me, the top priority was to build a valuable business. And I felt that bringing Blackstone in, doing the Comstar deal at that point in time, looking at merging the two companies together and building, a very strong management team was the best way to build a valuable business. And I think, for me, creating that kind of value has been, phenomenal. It's been phenomenal, and it took a lot to do that. I would say the first thing that happens when you move from manager to owner is you got to let go of your ego, and that's something that often comes in the way for a lot of management or a lot of owners from that perspective. I continue to sort of, sit on the board of the organization. I continue to sort of get involved in every possible way that I can without really taking away from what management's role is. I do not make operational decisions. However, when a technology is involved, or I may be interested in seeing some sort of new product, etc. I do get involved in the business. I think it's important to know what kind of value you want to create in a business when you're going down this journey. And again, I don't think there's I had a plan in mind other than the fact that GM Finance wanted an exit. We weren't prepared to IPO at that time because we wanted to do an IPO of a significant size if we were going to IPO. Our business has always been very profitable, our India entity, we've always said, let's leverage on the fact that we own the technology, we run a profitable business. And how do you leverage on that? You bring in the best investor who can really show you how to go to public markets and build that kind of value.
That's lovely. I think that really explains it from a very interesting vantage point, because it's a unique deal and structure. So thanks a ton for sharing. I'll probably just, to bring this to a close, I'd love to understand, there's often this debate that, as a public company which is really large, you have to balance between predictability, growth, and let's say innovation, right? Because innovation feels a bit experimental, etc., while you have to predictably show growth that shareholders value. Have you ever, thought of these as trade-offs? How do you keep in touch with the, trends that are in the market and ensure that the company is not becoming incumbent? Because one of the things you keep mentioning is this is an institution for the next 100 years. So how do you manage these two?
So, for me, this business, again, is not a quarter-to-quarter business. And I don't think people can look at it as a quarter-to-quarter business. Unfortunately, the market puts a lot of pressure on management. I am not a part of management, so I don't have that pressure. For me, what's most important is building an innovation-driven culture in the business, and to build a business that, again, is a long-term play. So invest in the right technologies, do the right thing, don't do the wrong thing for the sake of the market. And fortunately, our management is also very cognizant of the fact that we need to build a business that is successful. And to build a successful business, sometimes you need to let go of what the shareholder or the public investor may be expecting in the short term, and look at the long term. And I think the public investor over a period of time will understand that this is not a quarter-to-quarter business. You need to look at it from a 3 to 5 year lens and see where the business is going, where it has been, what the growth prospects of the business are. Because again, we're building a robust business. We've got good profitability, we've got good free cash flows, you've got great management, you've got good ROCs, you've got good growth. So whether the macros reflect something or not is not relevant. We're building a good, strong business. So when a shareholder looks at, or public shareholder looks at this business, they should really be looking at it from a lens of, here's a business I want to buy because it's a strong business, it's got the good fundamentals, and it'll continue to do well.
I love that. No, that's super interesting and nice to hear, and just goes to show that, being a owner of the business and not being a manager allows you to have that insight and, be a distance away yet fuel the business. Thank you so much for sharing. Going to the other side, I think, now that you are not an active executive, you do spend a lot of time on your family office. You mentioned that multiple things happening on that front. I'd love to know, how does a family office of your scale actually function? This is something that Sandeep, of course, in the podcast that he did with you, also focused upon. But it's interesting that a lot of new age folks are coming up with a lot of wealth now, because secondary markets are opening up, IPO markets are very robust. How should one look at this kind of wealth, deploying it? Would love to hear from your learnings.
So I think, you're right in that there are a lot of family offices emerging. I feel that we need to take a page out of the book of what's happening in Asia, also what's happened in Asia. Also because what's happened in Asia has been in our lifetime.
Yeah.
And therefore, it's very easy to sort of understand that better. I feel that we don't have enough experience in India in how to structure a family office from a long-term perspective. Again, everything I look at, needs to be long-term because really, that's the length of time you want to look at in terms of how you want to structure things. So today we're invested heavily in public equities, and again, because the public equity market is doing phenomenally well,
They're rewarding.
why would you go anywhere else? However, when I look at the family office, and I have 4 children, and when I look at my children, I really say that they're going to have to learn how to invest in private equity. They're going to have to learn how to invest in venture capital, in opportunities that are long term. And what's happening in Asia and in the West today, they've gone from that 30-40% public equities market return to a great return in private equity and venture startups, exactly what you're doing as well. And I think that time is coming, and I won't say it's 15, 20 years away, but I would say we've got a great run in public equities, but we need to now in parallel start looking at private equity deals, venture capital deals, startups, etc., to see where we can play a role. For me personally, I like to look at where I can add value. There are some, mobility funds that I look at because I believe that in that space I could add value, and bring some value, and I understand that space better. For me, it's very important to do things I understand as opposed to things I absolutely have no idea of, what's going on. And I think, from a family office perspective, there is a lot of, FOMO also, where that plays a big role in a lot of people's family offices. Am I, investing? There's several deals going on. Am I missing something? I think you need to be cognizant of the fact that there will always be opportunities. You need to pick the opportunities that you understand best. When we look at public equities, we work with money managers. We work with companies that, or individuals that understand markets, that understand a company and know why they're investing in a company, not just because somebody said it's a good business to invest in, but there's a lot of research that goes into that. That's extremely important. And then, the other side of it is, of course, you want safe capital. We continue to have some safe capital because, you always want that sort of safety bucket. And then, there's the startup ecosystem, the funds that invest in startups or in venture. And you want to work with the people that you feel understand the businesses. And you want to understand the business itself. So I spend a lot of time in, understanding businesses that we're investing in, because that's important to me. And, you will make mistakes. We will make mistakes. Sure. And, there will be successes and it's a learning curve. You're right. In family offices are new in India. And we need more, I would say, exposure, to what's happening in the East to really understand how to structure our family offices.
No, that's super insightful. I think thanks again for sharing. What I'm hearing is you need to keep a long-term horizon. You need to be up to date with the emerging asset classes, and you can't just rely on old information. And hopefully then have the structure in mind, risk reward in mind to go and participate. Thanks a ton for sharing and understanding what you do. So I think that's lovely. I'd love to understand maybe, now that we're discussing wealth, how has your relationship with wealth evolved over a period of time? How do you view money in the world? And what do you think is a good way for promoters of family businesses to also look at in terms of money and the reward ratio of how they run their businesses?
Yeah. So I think, creating wealth is important. Creating value is important. As you grow older, you want to sort of make more of an impact. And therefore, it's about what kind of impact am I making? Sure. And like I said earlier, I've got 4 children, and I would like to sort of, there's a very interesting topic. I'll switch for a moment.
Please.
That I'm part of a group called the Asia Leaders Fellowship, and there's a very interesting topic we discuss. It's called "What kind of ancestor would you like to be?" So it's really thinking about yourself in terms of what kind of values do I want to leave behind? And, people talk about legacy, and quite frankly, when I'm dead and gone, I wouldn't know, what's going on. I wouldn't know what it is. But can I instill the right values in my children? Can I make sure that my children are hardworking? And give them enough, but not give them too much, not to do anything in life. And yeah, you want to create wealth, you want to create value, and it means different things to different people. But what do you want to do with that wealth is what's important. What kind of impact do you want to have? Because you look at it, there's got to be some good karma that has happened to us, and how do you give that back? So yeah, I think that's also important. And as we grow older, we start thinking about these things more. And I want to actually train my children to start thinking like that at a younger age.
Yeah.
So I have a 6-year-old, and his birthday is in a few days, from now. And I want to take him to the blind school, and let him experience a different kind of people. Also give away his toys or give away his things, so that he learns the art of giving away, and not just sort of consuming. I think that's very important also. And we need to teach our children these things, because the world is changing, and it's important to have that element of spirituality, or that connection to God, as we call it. And I want the kids to learn that as well.
That's lovely. You mentioned values a couple of times. Can you expand on, what your values are, what you stand for? And also in terms of impact, you were telling me that, you're involved with the Ashoka project, a bunch of course, you have such great access in the country that you must be doing a lot. I'd love to hear what that looks like.
Yeah, I think, for me, trust and respect is extremely important. Just having that trust, the respect, and having, the sort of, for me, it's important that our family comes together and stays together. That's very important. In fact, another thing that my wife and I do is we do a coaching session on parenting, because we want to become better parents. We're doing a coaching session on the Bhagavad Gita. We do that once a week. We're learning the Bhagavad Gita. We're doing a coaching session almost once every 2 weeks with a parenting coach. So, I want the kids to, my family to have certain values that will, revolve around trust, around respect, around unity, around staying together, because it's extremely important, that we build a unit that is together. We come from a blended family, so it's not always easy, when you have a blended family. But fortunately, we've been very fortunate to have a system where we all work together, where we all sort of love each other, and I want that to continue even after my wife and I's our lifetime.
Sure. No, I think that's lovely. Now, another facet of your life is, you love sport. You mentioned polo a bunch of times in your past conversations. Now that, you have more life to yourself because you're not an active executive, what does day-to-day look like? Where do you spend your time beyond work?
So I'm a great planner.
Okay.
I mean, I actually, in October, I wrote down a 10-year plan for myself.
Oh, lovely. Can you
In
give us
terms
a
of broad,
sneak peek?
Yeah, in terms of broad strokes,
Sure.
not goals,
Okay.
but things I will focus on. Whether it's work engagements, non-work engagements. I'm involved in CII. I was the president of ACMA, so I have an involvement in ACMA. I'm involved in the Asia Leaders Fellowship, for example.
You're on the board of your school.
I'm on the board of Doon School. So there's a lot of non-work commitments that I have, and I'm very clear on the fact that I want to define what I will do and what I will not do. Sport is very important to me. Health and is important. Health and fitness is important to me. I play active polo. I run a team, and I play. As much as I can. However, what's also important to me is give back to my family. That's extremely important as well. So when I drew out my plan, for 10 years, I actually wrote down broad strokes of work-related, non-work-related, sport-related, foundation-related, what I want to do in terms of creating impact that, I've briefly talked about, what I want to give back to the family in what shape or form. And then, I flushed out 2025, to define what I will do. I'm not the kind of person who can sort of sit around without a very
course.
packed schedule.
I can imagine.
In fact, Vivek, our CEO, always says to me, he says, I have a more packed schedule for not having a job, but a very packed schedule for not having a job. But, it's something that I do things that I enjoy doing.
Sure.
And that's a great luxury, to be the master of your own time. It's a phenomenal luxury. And, there's a lot that I need to do and give back as well. And I'm conscious of that. And I'd like to continue to work in that space.
No, absolutely. I want to very quickly also double click because I, in my mind, already had a curious question to understand what are your non-Sona Comstar roles like, which would include, being on the board of Dune School.
So CII, I'm the incoming chairperson for the Northern Region of CII, being on the board of Dune, I'm working actually with a very interesting group called the Young Business Leaders Forum, which is part of ACMA, which is all the next generation of ACMA. And it's great. They've got a lot of energy, great ideas and wanting to build, stronger businesses. So I work, closely with them. I mentor them in a sense. So I do a lot of non-work related stuff as well. And I want to continue to do more of that, working to look at how we can build a foundation which can have systemic change, and I'm working with a think tank on building manufacturing competitiveness in India. So again, I feel that, it is almost an obligation for business leaders to look at how, in manufacturing, to look at how we can increase the manufacturing footprint in India because it's required. I was with the chief economist who talked about consumption sort of going down. I think maybe consumption is different, not gone down, but people are investing in different things. But again, it's something that we need to address as a nation. We need to look at it in terms of how we can grow our economy, and we need to play that role as well. And it's important that we do that.
Well, that's lovely. I think that really helps with a lot of context on you beyond the business person that we know you for. Maybe the last thing here is, this is a great, interesting question. If I had to ask you how your friends would describe you, what would you have to say?
I think my friends will think I'm a lot of fun.
Rahul attested to that before this, so I can agree. But this has been a lot of learnings from a very, very strong scale standpoint of learning about the business. I think to conclude, this is fairly systematic on the show, but the idea behind this question is to understand and condense all of your learnings in the last couple of years. We usually go back to a pivotal point, and perhaps 2015 feels like a pivotal point in your life. If you could go back right to yourself, and this is not about what you would change, but to condense all the learnings that you have between now and then, what would you have to say?
I think in 2015, what drove me was belief. And, I made a presentation to our entire management. At that time, there was a lot of, sort of skepticism. There was a lot of people who were unsure of what's going to happen, what's life going to look like. And my opening slide, or the title of my presentation, was belief. Oh, wow. Because, I have been someone who's had a great sort of relationship with belief. I'll call it that. I'm reminded of the fact that when I wanted to achieve certain things, and I'm going back to, I think, 2001, I would write them down on a note card. Wow. And continuously focus on those few things of significance that I wanted to achieve. Because I've always had a strong belief that if you want to achieve something, you can do it. And if you want to do something, you can do it. Anything you want to do in the world. There's been a lot of challenges that I've been through, not just 2015, but, even beyond that. But there's nothing that I've sort of ever felt that, we can't do this. I've always felt that there is a solution to every challenge. There is an opportunity in every challenge. So I would really boil it down to belief.
I love that. Belief is such a great note to end the conversation on. I think someday you should share that presentation with the world. It'll be full of a lot of great learnings. But thank you so much, Sanjay, for being on the show.
Thank you.
I've absolutely loved this conversation. So much to learn from you, and a lot of respect and inspiration for what you've built. And thanks for doing that for many people. I'm sure people listening will appreciate all your learnings. Thank you so much.
Thank you very much. It's been a pleasure.
Awesome.
Hello. If you made it this far, you've probably watched the entire episode, and if you've done that, I'm really grateful. I and my team try to put in a lot of effort to ensure that we can bring the best quality content to you. So if you liked the episode, if you watched it thus far, my request to you is to share it with people, to subscribe to the channel, and to ensure that we can keep growing. We are everything and anything only because of you, our listeners. Thank you so much for tuning in. We'll keep bringing to you amazing content. Cheers.